Hello, everyone, and welcome back to the world's best investing podcast. Tesla is now positioned to go through an inflection point, and it will just produce way, way more cash. It's going to become a gigantic cash machine. I've been telling everyone AMD was going to do the same, and now you can see that start to materialize. The company is printing more cash, geared up for an exponential free cash flow per share explosion, and the market is starting to price that in. Tesla is going to do something very similar over the coming 2 to 4 or 5 years. And today I prepared an in-depth presentation to explain everything you need to know. I've been a Tesla shareholder since the year 2016. I got into the stock at $13 per share. So I've seen Tesla do very well at times, correct aggressively at times in terms of the stock price, but I've stayed focused on the fundamentals for a decade now. So probably this presentation is worth watching if you want to truly understand what's happening inside the company now and where it's headed. So let's get deep into it. Right. So basically, this company is a cash machine that has never really slowed if you normalize for circumstances, things that changed outside of the company's control. What we have now is three levers coming in on a $16 billion cash from operations base. And this is what makes the stock pick here quite asymmetric, in my opinion. This is what Tesla's next 5 years are going to be all about. As I was telling you guys, this company is going through an inflection point and is now positioned to print way, way more cash. So we have a few things happening at the same time. One, tremendously enhanced manufacturing efficiency compounded through this last rate hike cycle. So rates have gone from 0 essentially in 2021 to around 5 in the past few years. And Tesla has had to work its way through that. Higher rates make cars less affordable. So it makes it harder for the business to sell cars and ultimately do so profitably in order to produce cash. However, in Q1 2026, we have an inflection point, some numbers that confirm that this process is complete. And then we have some other additional information about Robotaxi, Optimus, Terafab, which these are new levers coming into the company's core creation, value creation engine, which is basically just printing stuff. Tesla is a machine that's very good at manufacturing things. And as they get better at manufacturing, they deliver a higher value to price ratio to people, so more bang for their buck, and that's how they make more money. So these things are coming in now, and they're just going to compound, enhance that core value creation process. Now, here, this is the central aspect of the thesis, which is cash from operations, operating cash flow, OCF, divided by CapEx. You can see how from Q1 2017 to Q1 2026, this metric has been cyclical. It just goes up and down. If it goes up, it means Tesla is producing more cash per unit, per dollar that it reinvests into the business. So it's basically cash produced divided by cash invested. If that goes up, it means that Tesla at that point in time tentatively reached a new peak of efficiency. They got better at manufacturing cars, selling them, delivering them, and making money in a way that delivers cash to the bottom line, right? So it's cyclical because whenever Tesla reaches a new level of efficiency, they lower prices. This is what I call the Costco algorithm, which is basically being maniacally focused on delivering more value per dollar. And that takes on the form of both improving the product and the service and then lowering prices as you do that. That is what this company does. Now, you can see that they did hit it. You can see that they hit a pretty massive peak here in the year 2021, 2022, roughly, and then rates came in. So structurally, this metric has been lower. However, if you normalize these peaks for the price of money, they're actually a lot higher, right? Because the price of money here was 0, and the price of money here is infinitely higher. So if you go from 0 to 5%, that's not a 5% increase. That's an infinite increase. It's just money is way less affordable now than it was back then. What this means is that what's been happening throughout this period is Tesla has been getting way more efficient. And this is something that I've been telling everyone for years now, right? So this is roughly from the year 2022 to date. This is Q1 2026. And Q1 2026 is the confirmation, as we'll see now. But, as I was saying, rates are much higher. Operating cash flow divided by CapEx actually quite sustainable, even though they've been lowering prices aggressively. Remember that I think it was a year or two ago, Tesla was being heavily criticized for lowering prices. And the market understood that at times as a sign of weakness. So if you normalize all of that, and I'm sure there's a quant here in the audience that can do it, it means these guys are a lot more powerful right now than they were 3 or 4 years ago. Now, in Q1 2026, EMEA deliveries quarter over quarter went up 150%. Berlin units came in at 61K, which is a record. Auto margin X credits went from 17.9 to 19.2 sequentially. And the order backlog in Q1 is at a 2-year high. Interestingly, Vibhav Tanija. I hope I pronounced your name correctly, Vibhav. If I didn't, let me know. Let me know. Invite me over to Tesla and we can discuss that. I'm kidding. But who knows? A field trip could be nice. Anyways, he said 10 years back, when we launched Model 3 in the US with a promise of $35,000 starting price, which adjusted for inflation translates to about $48,000 today in today's dollar terms. The starting price of Model 3 today is way less than that, while the product is way more compelling. So, see, he's talking about the value to price ratio. A lot more value for a lower price, or whatever, in whichever way you do that, the equation just works because you do more value per dollar. And that's why customers seem to be buying this now. So now we have a 25 billion capex ramp up coming, and this is expected to turn free cash flow negative for the year. So as we know, free cash flow is company basically makes money, revenue, then has expenses, or you take expenses away, then you take OPEX. That's free cash flow. However, if CapEx is going to go up a lot, you can just use cash from operations as a proxy of the company's underlying ability to produce cash. So we have these new levers that are coming on this new baseline of efficiency that Tesla has built, which is here. And you could argue that, but my view is that the company is way more efficient. And then you have the CFO confirming that, talking about the value to price ratio, which is really it's a pillar of my fundamental analysis framework. So what's happening over the past few quarters, tentatively, is that actually cash from operations, which is the red line, and capex are both going up simultaneously now. They're starting to trend up, and this sort of it started to happen around here. I think it was a year, a bit ago, nearly 2 years. And this last quarter in Q1 2026, you see Tesla investing very heavily in this new future of Robotaxi, Optimus, and Terafab. But then cash from operations is going up too. So again, going forward, as this capex cycle ramps up, I think that the proxy for free cash flow, obviously free cash flow per share too, is cash from operations. You can do cash from operations per share if you want to do that. But the point is that I think this company's ability to print cash has improved a lot in this period. And so this is the peak from the 2021 period. This was Tesla just coming out of what Elon Musk called production hell, which is for like a year or something, or maybe 2 years, they were very focused on enhancing manufacturing efficiency to bring the Model 3 to life. So a smaller car, more affordable, much more mass market. And that's what led to this ramp up in production of cash. And that's what actually sent the stock up 10x. So my point is this is going to happen again, except now we have levers which are slightly different. And it's interesting because if you look at Robotaxi and Optimus, the core value driver of this thing is intelligence. And so by itself, if you want to look at this business as an auto business, you can do that. But actually, on top of the auto business, what's coming now is an intelligence platform. And then by definition, these are just two verticals of the intelligence platform. So you have robo-taxis, which move you around. These are robots that leverage Tesla's intelligence internet to move you around. And then you have Optimus. But there's going to be a whole lot of this. And so these are basically two vertical instances of the AI at the edge thesis that I've kept talking about for years. My expectation is that these verticals are going to grow a lot and they're going to be transformational, but I don't think these are going to be the last two verticals. And then by themselves, these verticals will act as platforms. So for example, I think Optimus, well, the first version of Optimus will be a generic robot, but then we will see people use the underlying intelligence and its physical capabilities to produce further vertical instances of the robot itself. It's like the Palantir thesis. They have a digital twin platform, then they specialize in the private sector and the public sector, actually the inverse order chronologically, and then they continue building vertical instances on top of that. So they did Warp Speed for manufacturing. That's a digital twin platform, the core one, but concentrated on the manufacturing vertical. Then you have ShipOS, which is a further vertical instance of Warp Speed itself. And so this thesis is going to be similar to the Tesla one in that it's going to be fractal. You're going to have new verticals propping up from the intelligence layer, and those verticals are going to act as platforms themselves. And we're going to see that scale worldwide just because you can't really replicate this industrial infrastructure at the moment. So this is a $16 billion cash from operations base and a lot of capex, which other companies simply can't invest. So at the moment, Tesla doesn't really have any competition. And that's why, to me, the next 2-5 years look extremely asymmetric. Now, these things, people get impatient, right? As happened with AMD. You know how back in April 2025, sort of everyone gave up on AMD. That was because this company was, I think, right at the end of its capex cycle. So actually, the market was sitting tight since 2022. Some pessimism here and there, but nothing like what we saw in April 2025, because the market was hoping to see the capex cycle through. soon enough. So when a company of this sort goes into a capex cycle, it tends to happen that the market sooner or later gives up because market participants are not waiting. They're not willing to wait for 18 months, 24, 3 years, 4 years, whatever it is. But I think that at the other side of this capex cycle, the reward is exponential again, as it was, back in the 2017 period. The increase in market cap since then has been exponential. I mean, at least good enough for me. And so what I think is coming next is something similar, right? So from $13 per share to today's prices, I'm up quite a bit. I think this next cycle sends Tesla stock up 10, 20, potentially even more as Tesla comes to be a second kind of internet, which moves around autonomy tokens. And that's a new horizontal platform that the rest of the economy builds on. So as you guys know, I believe that this is probably a $20 trillion company in the making, as is Palantir. And that's because I think Tesla is going to be infrastructure that everyone in the economy uses to commoditize, to extract commoditized energy and intelligence. That's what the economy does today. It's just people doing relatively, doing jobs, processing information, deciding what they do next. I think Tesla becomes the provider of that people tap into via an API, and then we just build a whole new economy on top of that. So this is a massive thesis. I'm up quite a bit on this investment today, and I'm holding. I think this is going to be a beautiful thesis over the next 5 years. So guys, thank you very much for joining me. As always, if you enjoyed this video, could you please like and subscribe and share with one friend? These videos, deep dives, and updates are for free, and so the only way this grows is with your help. So thank you very much in advance. Take care, and see you guys next time.